Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Tuesday, the 28th of April. It's quite a selection today, starting off with Bacanora Minerals, where you can see that the shares have gapped up to start this month and haven't actually filled that gap down towards the 80 pence level, which is a very positive sign. We've also got a V-shaped bull flag out of which the shares are just about to break out of. Best way forward now probably is to use the 20-day moving averages at 85 pence as an end of day close stop loss as we await a best case scenario target as high as £1.50, which could be achieved over the next 1 to 2 months at the top of July 2014 price channel. Any dips in the meantime towards the 20-day line regarded as a buying opportunity, which would obviously improve the risk reward in the initial stages. Next up is Gulf Keystone. Very difficult stock. It's been over the recent past, many false dawns and bull traps through the 50-day moving average, as we saw in December, and in February, the 50-day moving average, the blue line there on the daily chart. Current situations, we have actually prodded and pushed right above the 50-day line. That's around the 40 pence level, so that is encouraging. Obviously, the main issue now is whether the shares can actually sustain this in the recent past. Breaking the 50-day line has actually been a sell point, not a buy point. But the view at the moment is that we could be at the floor of a rising trend channel from January. That runs with the 20-day moving average of 38 pence. And while we hold above that on an end-of-day close basis, we could partially or even fully retest this February spike towards 60 pence, which is also the area of the 200-day moving average. Decent support points here in the RSI window as well, and the spike in volume around the turn of the month. On the positive side as well, could back at least a small rally for Gulf Keystone, even though we can see, and it's obvious, that the shares have been in a lengthy downtrend. Madagascar oil, next up on the podium here. Shares obviously spiked the other week with an unfilled gap to the upside. That remains unfilled, and the shares have actually bounced off the top of that gap towards 6 pence. And at the 20-day moving average at 6.03 pence. That's the floor of a rising trend channel from December. And while we hold above 6 pence, we could see a partial or even full retest of the best levels of earlier this month through 12 pence. If you're cautious on the stock, want to see more evidence of strength, maybe wait on an end of day close above this green line, which is the 10-day moving average of 7.08 pence. That would be a decent momentum trigger, and the initial target after that would be the 200-day line at 8.66 pence over the next couple of weeks. Going with the earlier view or review of the Bacanora situation, we've got rare earth minerals. Sort of seen the shares consolidating either side of the 200-day moving average. That's currently at 1.15 pence. Overall message here still, while we hold above the 1 pence area, we're looking for 1.4 pence. That was the message on the last update. Ideally, there would be no break back below the 20-day moving average at 1.12 pence ahead of a push towards 1.4 pence over the next couple of weeks. Stunning chart here at Sound Oil. What you can see here is that we had the Golden Cross buy signal in March. That already sort of accompanied a move which was well underway in terms of recovery. It started after a January bear trap rebound. Golden Cross here, this blue and black line crossing up higher in March. Situation now is that it's almost a runaway move that we've got to the upside. The view is that while there's no end-of-day close back below the 10-day moving average, the green line at 20 pence, we could still see significant further upside. Best case scenario over the next month or so would be at the top of a rising June price channel at 35 pence. So still a way to go on that. Any weakness back towards the 20 pence area, say the initial 20.75 pence April resistance, is regarded as a buying opportunity, as it would cool off the overbought RSI now towards 86 out of 100, which is pretty highly cooked, let us say. Finishing off with Vast Resources, this has been a slow burn situation over the last couple of months, 2-3 months in fact. It looks as though the shares are still bumping along the bottom of this trend channel from the end of January. Decent support points here in the RSI window as well. The RSI is above neutral 50, which is normally a leading indicator on a break to the upside. Probably the best way forward here is to use the initial 0.75 pence April resistance as your buy trigger, momentum buy trigger. End of day close back above that could see a push towards the best levels of the year through 1 pence over the following 1 to 2 months. And that could happen relatively quickly, given that such a move could echo what we saw in January, where progress was made quite quickly towards the 1 pence area. That's it from me. More updates at masterinvestor.co.uk.